Hello everyone, welcome to a new video. On this lesson, I'll be breaking down a short position I took on your USD today and also talk about the seek and destroy profile, one of the hardest environments to trade. So, the trade I entered was within that profile, and I'll show you exactly how I managed it along with the key elements you need to see on the chart to trade this profile successfully. The structure of this video will be as follows. First, I'll walk you through the thought process behind the trade, then I'll explain what a seek and destroy profile is, and finally, how to trade it. So make sure to stick around until the end of this video, and let's not waste any time, let's get started. So starting with the trade breakdown, I shared that on my Twitter account, so you can go and follow me there. I'm gonna leave the link down in the description. So as you can see here is a trade. It was for 2 hours, right? And here's the execution, entered from here and exited from here. And now let's head into the charts, and I'm going to show you exactly the narrative behind this trade. To make things simple, you want to base your trades on 3 time frames. Every time you want to take a trade, you need to frame it on 3 time frames. And all the 3 time frames must be either bearish or bullish. So that is time frame alignment, right? And you wait for them one by one. So don't mix them together. So you see that the 4 hour is bearish, and you go to the 15-minute on that same fraction of that price action, and you see it bearish and you take the trade. No, you wait for them to turn bearish one by one. I'm going to show you exactly how that looks like in the chart. Starting with the 4 hour, we need the bias, right, on the higher time frame. And why did I choose the 4 hour and not the daily or the weekly? I received a lot of DMs about this. So why did you choose the 4 hour and not the daily? If you go to the daily time frame, we can see that we don't have really much to work with. All we have here is 5 or 6 down close candles. So we don't have really that much. But if we go to the 4 hour, as you can see here, we have more details on here, and we actually have that concept of internal to external and external to internal. So basically fair value gaps to all lows or all highs. So expansion, as you can see, expansion, retracement to internal, and then another expansion to external, retracement, expansion, retracement, expansion. You have a retracement to this fair value gap. So what is the next logical move? Exactly, external range liquidities, this one. So our bias is bearish on the 4 hour on the higher time frame. So the first time frame is now bearish, and we want to see 2 more time frames turns bearish. We also have this draw on liquidity. So in my opinion, this is the draw on liquidity. At least the consequent encroachment of this fair value gap idea. So this is a draw on liquidity. Now let's go to another time frame. Let's use the 15-minute. So as you can see that the 15-minute now is bullish. It is now retracing to that fair value gap. Now we want to see it turns bearish. And here we don't have anything, right? We don't have anything here. This is the Asian session. It is a consolidation. It is now consolidating, right? And after midnight open, price traded above to this fair value gap right here, that for our internal range liquidity, and taking liquidity from the Asian range. So this is the Asian high right here, and then breaking lower, returning to a small fair value gap right here and attacking this original consolidation. So now I was waiting for price to retrace this fair value gap right here, but we didn't have the retracement at first, so I waited. Now price traded to here, as you can see, and then we have a fake market structure shift. Why is this a fake market structure shift and not a real one? Now, first of all, we have that draw on liquidity on the higher time frame, so that consequent encroachment of that fair value gap. So I still look for more downside movement, right? More bearishness. So for me, this is only a fake market structure shift. This move right here, it was intended to take liquidity from this short-term high and fill this fair value gap right here. On the next video, I'm going to give you a full guide on how to spot high probability sweep on liquidity, so reversals. So whenever you see a rate on a certain high or a certain low, you know that this is only a sweep on liquidity and price will likely to reverse. That is for the next video. For now, let's stick to the trade breakdown. So when I saw this fair value gap get filled, now my 15 minute is now also bearish, right? Just like the 4 hour. Now all I need is one more time frame to turn bearish, which is the 3 minute or the 5 minute. So let's go to 3 minute time frame, right? And guys, one more thing, this move right here is very, very, very important. So this Judas swing after midnight is very important. If we didn't have that, so if price, let's say that this is the midnight open and price immediately traded below, I wouldn't take this trade. From my journal and from my experience, I have a lot of losses taken just because of this. You need to see a trade. If you are bearish, you need to see the price trades above the midnight open. This is the concept of open, high, low, and close. So basically every candle, as you can see here, it has an open, right? Let's see bearish candles. So it has an open, right? Trades above, expansion lower, and then close. Another one open, trades above, and then expansion lower. So this is a true day open, right? The midnight open. So this move right here to take liquidity from here and then fill the fair value gap is an indication of a bearish day, right? So this is very important. Now let's move on to the 1 minute or the 3 minute time frame, and let's wait for it to turn bearish as well. So as you can see, so we took this short-term high and we have a market structure shift after it. So I believe I took my entry from here. My stop loss was here, right? For 2 hours. No, I believe my entry was here, right? And here you go, something like this, I don't remember. And we also have an SMT divergence here, right? So between the Dixie, if we compare this short-term high right here, the short-term low, we can see that this rate, we can see that this expansion right here took this high right here, right? But the expansion to the downside on Dixie couldn't make that new low, right? So we have an SMT divergence, a great confluence when entering trades. And now after we finished from the trade breakdown, let's move on to the seek and destroy profile. What is it and how to trade it successfully, right?